Is Bitcoin really the future of money? That's the age-old question we're exploring today. In the last decade, this question has become more and more relevant, stirring up heated debates amongst economists, tech enthusiasts, and the general public alike. So, what is Bitcoin, and why does this question matter so much? To put it quite simply, Bitcoin is a decentralized digital currency. Unlike traditional forms of money, Bitcoin operates without the oversight of a central bank or a single administrator. It's a new breed of currency, one that is entirely digital and operates on a technology called blockchain. Bitcoin was born out of a white paper published in late 2008 by an anonymous individual, or perhaps a group of individuals, who chose to use the pseudonym Satoshi Nakamoto. This groundbreaking document outlined the framework for a peer-to-peer electronic cash system, a system that would later come to be known as Bitcoin. Since its inception, Bitcoin has been a topic of fascination and controversy. As the first of its kind, it has paved the way for a new era of digital currencies, also known as cryptocurrencies. But despite its revolutionary nature, Bitcoin has always been shrouded in mystery, not least because its creator, Satoshi Nakamoto, remains unknown to this day. But let's get back to our main question. Is Bitcoin really the future of money? Why does this question stir so much interest and debate? It's because the implications of this question are vast. If Bitcoin or any other cryptocurrency becomes the future of money, it could radically change our financial systems and the way we conduct transactions. It could even redefine the concept of money itself. Now that we've got an understanding of what Bitcoin is, let's delve into why this question is so significant. How does Bitcoin compare to traditional forms of currency? This is a question many are pondering as we navigate our way through the digital age. Let's delve into the unique characteristics of Bitcoin and see how they stack up against our traditional forms of currency. Firstly, Bitcoin is digital, while traditional currency is physical. This means Bitcoin exists solely in the online world, stored in digital wallets and traded on digital exchanges. Traditional currency, on the other hand, has a physical presence. You can hold a dollar bill in your hand, stash it in a physical wallet, or deposit it in a brick-and-mortar bank. Next, we have the concept of centralization versus decentralization. Traditional currency is centralized, meaning it's regulated by a central authority, like a government or a central bank. These bodies determine the supply of money, set interest rates, and have the power to print more money if they deem it necessary. Bitcoin, conversely, is decentralized. There's no central authority controlling it. Instead, it operates on a peer-to-peer network where transactions are verified by network nodes through cryptography and recorded in a public ledger called a blockchain. This leads us to the role of banks and governments. With traditional currency, banks play a pivotal role. They store our money, facilitate transactions, and offer various financial services. Governments, meanwhile, maintain economic stability, implement monetary policies, and ensure the value of the currency. However, with Bitcoin, banks and governments are essentially sidelined. Transactions are made directly between users without the need for intermediaries. Bitcoin's value isn't determined by a central authority, but by supply and demand dynamics in the market. As we can see, Bitcoin and traditional currencies are vastly different. Bitcoin's digital nature, its decentralized system, and the lack of a need for banks and governments set it apart from traditional forms of currency. But does that mean Bitcoin is the future? Well, that's a question we'll explore further. What are the advantages of Bitcoin, you might ask? Well, the world of Bitcoin isn't just a bustling marketplace of digital transactions, it's a universe of opportunities and revolutionary features that are reshaping our financial landscape. First on the list of Bitcoin's benefits is its potential for high returns. Let's talk about the elephant in the room, volatility. You might see it as a scary roller coaster ride, but look closer. This very volatility can be a boon for savvy investors. With its price fluctuating, those who buy low and sell high can reap substantial rewards. Next, let's talk about convenience. Bitcoin transactions happen in the blink of an eye, no matter where you are in the world. There's no need to wait for a bank to open or for a check to clear. It's as easy as sending an email. This ease of use makes Bitcoin a highly convenient option for online transactions, be it booking a vacation, buying a cup of coffee, or even purchasing a car. Thirdly, Bitcoin's accessibility is a game changer. There are no geographical boundaries or banking prerequisites. All you need is internet access. This opens up financial opportunities for those in remote areas or those who are unbanked, providing them with a chance to participate in the global economy. Last but not least, Bitcoin holds potential as a global currency. It operates independently of any central authority, making it immune to government interference and manipulation. This decentralization allows Bitcoin to provide a uniform financial platform, breaking down the barriers of currency exchange rates and international transaction fees. In a nutshell, Bitcoin is a financial juggernaut with the potential to offer high returns, convenience for online transactions, unparalleled accessibility, and the chance to function as a global currency. It's not just a digital coin, it's a revolution. Clearly, Bitcoin has some compelling pros, but what about the cons? And what about the downsides of Bitcoin? Now, while Bitcoin has some enticing advantages, it's only fair to discuss its drawbacks. One of the most prominent downsides is its notorious volatility. The value of Bitcoin can fluctuate wildly within a short period, making it a risky investment for many. Imagine waking up to find the value of your Bitcoin holdings has plummeted overnight. Not exactly a calming thought for a good night's sleep, is it? Next, we have Bitcoin's association with illegal activities. Because Bitcoin transactions can be relatively anonymous, it has been used in various illicit activities, from money laundering to purchasing illegal goods on the dark web. This association, although not representative of all Bitcoin use, has tainted its reputation in some circles. Then there's the issue of regulation, or rather, the lack thereof. Traditional currencies are regulated by central banks or governmental bodies, providing a certain level of security and stability. Bitcoin, on the other hand, operates in a decentralized system, free from any central authority's control. While this offers freedom and flexibility, it also comes with its share of risks, including potential manipulation and lack of recourse in case of fraud. And finally, let's talk about the potential for loss. We've all heard those stories of people losing their Bitcoin due to forgotten passwords or hacked accounts. In the world of Bitcoin, if you lose your private keys or your digital wallet gets compromised, your Bitcoin is gone, and there's no bank or institution to turn to for help. It's a bit like burying treasure and then forgetting where you dug the hole. So, while Bitcoin's decentralization, potential for growth, and anonymity can be appealing, these same features can also be a double-edged sword, leading to significant risks and challenges. With these pros and cons in mind, we must ask ourselves, is Bitcoin the future? So, is Bitcoin really the future of money? That's the million-dollar question we've been wrestling with. We've journeyed through the age-old question of what makes a currency valuable, compared Bitcoin with traditional currency, and weighed the pros and cons of this digital asset. Let's quickly recap. On one hand, Bitcoin's decentralization, limited supply, and potential for anonymity make it an attractive alternative to traditional currencies. It has the power to break down financial barriers, democratize wealth, and potentially give individuals more control over their financial futures. On the other hand, Bitcoin's volatility, lack of regulation, and susceptibility to cyber attacks raise legitimate concerns. It's this very lack of regulation that can make it a risky investment, and its volatility can lead to significant financial loss. And then there's the environmental impact. Mining Bitcoin requires a significant amount of energy, contributing to our global carbon footprint. There's a clear divide in opinion when it comes to Bitcoin. Some see it as the inevitable future of finance, a digital gold if you will. Others view it with skepticism, citing its volatility and lack of regulation as reasons to steer clear. The truth of the matter is, the future of Bitcoin, like any investment, is uncertain. History has shown us that financial markets can be unpredictable. And while Bitcoin has shown promise, it's not immune to this reality. So, where does this leave us? Well, it leaves us in a state of continuous learning and observation. As with any financial decision, it's crucial to do your research, understand the risks, and proceed with caution. Whether or not Bitcoin is the future of money, one thing is certain. It's a fascinating topic that will continue to spark debate and intrigue. It's a testament to the evolving nature of our financial system and a symbol of the potential for innovation in this space. Whether or not Bitcoin is the future of money, one thing is certain. It's a fascinating topic that will continue to spark debate and intrigue.